80s, late 80s. Uh, there was only one exchange which worked for 2 hours. There was only one index, which was the Sensex. And the day I joined, the Sensex was around 550 or something. As soon as I joined, there was a bear market. VP Singh came out with a budget, and from February of 86 to I think end of 87, we had a bear market, and the Sensex went down to 390. And yeah, so those were the days where I made my beginning in the market. Those days, there was nothing called investing. Who's buying was the paramount thing. Sanstha le che, Harshad bhai le che, company circle level che. Those were the only things which were tracked. Investing for the ones who actually knew what investing was were multinationals. So Colgate, Castrol, ITC, these were the investing stocks. And then you had merger, which is ACC, ordinary, which is Tata Steel, Reliance. So all these stocks were the trading speculative stocks. Then you had Century, and of course Bajaj Auto was one homegrown blue chip which was falling in the investment category. But I was a trader. I was a broker first, a trader second, and investing with, if I made some money, my dad would say, buy some Cipla, buy some Colgate, and that is what was investing. So very simple life.
Very interesting. You know, I have seen people, I'm going to talk about only investing, speculation and all, not much today. But I have seen people, those who read Warren Buffett and are purists and believe investing is to be done this way. And I see you, and you have come up from the streets. You did not have any kind of a manual or a guide on how to go about doing things. Of course, Warren came into your life also much later. So just want to understand this blend of street smartness and the bookish investor that everybody is trying to, how do you, how has that shaped you, and how has that helped you?
So once a trader, always a trader. Whatever label people put, a lot of investors become investors in stocks which go down. And that is the truth of life. But jokes apart, actual investing, so I am a good reader. I was a voracious reader earlier. And I did come in contact with Ramdev Agarwal and Motilal Oswal, were sub-brokers along with me and my dad and my brother in late 80s, early 90s. Is a professional category, early 90s, both are, we got cards. And Ramdev actually was an investor. He knew what he was doing. He would read balance sheets. We came to balance sheet and investing much later. I have this friend, Arvind Joshi, who of course now has made a lot of money and retired to his farm near Pune. And he was the one who started ValueQuest Research. It was just a research organization before it became what it is now. And that is when actually my research journey started and investing in earnest. Then mid-90s, while in my broking days, I used to go around meeting large HNI investors, institutions, and that is when I came in touch with Rakesh ji. And by his side and with his knowledge and experience is when I started understanding what serious investing was all about, and where, what you said, the journey started in earnest from there.
So that leads me to the next question. I have worked with Rakesh ji, but he was not an easy personality. So, we all have a lot of admiration and respect for him. But breaking that barrier of becoming friends with him, how did you do that?
for being close to him or a friend, you needed to be a market ka keeda. You needed to eat, breathe, live the markets. He was of that kind, and fortunately, I was also of that same milk. So, fully immersed in market. He did not suffer fools gladly. He would attack your opinions viciously. You had to be able to stand your ground. Wishy-washy thinking, he did not like yes men around him, and till the end, there were no yes men around him. So you had to be convinced, had strong conviction in your beliefs, in your strategy, in your stocks. Only then you could, withstand his personality, as you said. And fortunately or unfortunately, I am also of that. I can give it back as much as he gave it to me.
Yeah, I mean, I have never seen anybody stand up to Rakesh ji except you. Oh,
That is not true. There are other people also,
okay.
but
I have
I'll
not
take
seen.
that as
Maybe
a
there are
compliment. I'll
maybe
take
there
that
are
as a
other people,
compliment.
but I have not seen personally. So, honestly, I mean, how did that come about? How did that chemistry develop? That brutal honesty.
No, as I said, this is what he looked for in his friends, that they had strong conviction. Right or wrong did not matter. You had to have conviction in your beliefs. And as I said, we ate and lived markets. We breathed markets. So, anytime during day, afternoon, during market, after market, in the evening, night, at Jeffrey's, his house, wherever, it was markets, markets, markets. With maybe a few other things thrown in. But so this is like-minded people getting together, and once we got together, we were like together throughout life.
So you did mention that you, of course, you started reading Warren's newsletters. Besides that, of course, you met Rakesh ji, and that's where your journey as an investor began, which was probably in late 90s or mid 90s.
Mid-90s.
Sorry?
Early 90s,
Early
Arvind
90s.
ValueQuest started. Mid-90s, with the help of that research, I went around meeting people, and that's when I met Rakesh ji.
No, so
94, 95.
You had the most, preferred seat with India's biggest investor. And I would say I have not seen anybody with a large heart and a large risk appetite like him. So what have you learned from him? And did you try to inculcate that into your personality, or how did you deal with that?
Yeah, so, and one thing you forgot, most transparent. His portfolio was there for all to see. He would discuss his stocks with everyone. Even on television, he was not shy of, saying what he was buying or selling. So, the biggest learning from Rakesh ji was that though I was always inclined towards equities, the one thing I learned was keep all your money in stocks. No realty, no debt, no gold, no nothing. Everything in the markets. He kept 105%, 10%. I kept 100% in markets. I never graduated to leveraging the way he did. But the biggest learning was keep everything in the market. This is not advice for all of you, but the younger ones. But this is what I learned, and that is what has given that multiplier where, of course, because markets performed, and we are sitting here with Sensex going, when I joined, from 500 to 80,000 odd. So it has been a bull market in India for a long time. And if you are invested in equities, now you can say it was a smart decision and I did well. There were times when you root that decision also. The other thing about investing which I learned from him was that make investing an act of wisdom, not intelligence. You assess the business on broad parameters, build scenarios 3, 5, 10 years out, judge the promoter, judge his integrity and capability, and invest, and then have patience. If you have conviction, your patience might be tested, but your conviction will be rewarded. And he was very fond of saying that, of course.
Co-powered by QuickHealAntiFraud.ai. अब कोई fraud नहीं.
In association with SBI. Be alert, be scam safe.
Startup Mahkum Edition 2 is going to give a fillip to the startup ecosystem where the entire ecosystem will converge, interact, and people will learn from each other. Startup is all about innovation, scaling up of facilities to bring in employment with generation, and I think with 3,000 startups displaying their products, displaying their ideas, it would be a great learning exercise. Especially buyers and other users of this technology would also be converging in the event, and they would get to know all kinds of technologies that are available which otherwise are not on display.
2 लाख टक्के के नीचे
मेरी गोल्ड चेन अलमारी में।
अपने कीमती सामान को घर में यहाँ वहाँ छुपाना उनके साथ जुआ खेलने जैसा है।
दाव नहीं, गोदरेज होम लॉकर लगाइए। इसकी 10 गुना मजबूती, डिजिटल सिक्योरिटी और एंटी थेफ्ट अलार्म दे टेंशन फ्री सिक्योरिटी।
आते हैं 2 अतिरिक्त निःशुल्क सिलेंडर।
जब से उज्ज्वला कंपनी का सिलेंडर मिलने लगा है तब से बहुत आसान हो गया है, खाना जल्दी भी बन जाता है और काम भी घर के सारे हो जाते हैं।
योगी जी, मोदी जी का बहुत बहुत धन्यवाद हमें धुएं से छुटकारा देने के लिए।
उत्तर प्रदेश में डबल इंजन की सरकार महिलाओं को बना रही है सशक्त और आत्मनिर्भर।
What goes into this, भाई?
चलो पता लगाते हैं। Visa Infinite के साथ get exclusive dining experiences at the world's finest restaurants. Enjoy life's best moments securely with Visa. The world has infinite experiences. Find yours.
So the way you build your wealth is very different from way you preserve your wealth. Then you have things to lose.
Not really, but size becomes a constraint. You are not able to participate in the really smaller caps, and you need to spread your bets. Various things which hinder you to follow the strategy which you earlier. So, market and investing is all about evolving. I have seen very good investors who get stuck in their own mind with the belief they have, with the style of investing they have, with the kind of stocks they prefer, with the parameters of quantitative analysis which they do, and then they stick to it and they can't get out of it. So there will be periods of time when they underperform drastically. So evolving is the name of the game.
There are other market luminaries like Radhakishan ji. He is the rarest of rare gem. He has been a successful speculator on the long side as well as on the short side, which is a rarity in itself. He has been a fantastic investor where he used to own all the blue chips, and very late you would realize that those were blue chips. And of course, then he built a business that went on to create tremendous wealth. I'm sure you had a fantastic vantage point to see him grow as well. What have you learned from him?
I don't know whether he'll like me talking about him and his investing style and all, but someone has to do it, I guess. So, yeah, he is actually an original investor and an original thinker. Like, he figured out all the concepts of investing which we read about from Warren and Charlie and all these Peter Lynches of the world, and in a very desi, earthy way. Like, for example, he would say कि इन्वेस्ट करना है तो ये धंधा क्या पैसा फेंक के बनाया जा सकता है. So basically, can you throw money at a business and build it or disrupt a business? So, which he's basically talking about moats, but he figured out moats in his own way. Okay, one thing which I have heard only him say and nobody else is, क्या मैं ये स्टॉक को P देना चाहूंगा? What is PE? PE is actually giving someone more than what he's earning. And the third thing, which he always keeps in his mind, never articulates, but will you lend money to this promoter? अगर तू उसको 5 करोड़ रुपया lend नहीं करेगा तो उसका 5 करोड़ का शेयर क्यों खरीद रहा है? So basically, that test which he internally came up with was very clear. His investing style, like very innovative or very original again. He had two portfolios. He had one portfolio in his mind, he had two portfolios. One was made of businesses which had nothing to do with the government, which had very simple businesses, which were low debt or no debt, which were cash up front, and if possible, negative working capital. So banking, insurance, Nestle's of the world, so consumer brands, and D-Mart or Jubilant. So these were the businesses which were his core portfolio. There were others which he called Barsati Medak. So those were to be sold at the first hint of trouble in the market. He was a fantastic judge of the market, or is a fantastic judge of the market. So whenever he saw overvaluation, euphoria, blah, 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 that part of the portfolio went out. This part of the portfolio, come what may, he will not sell. So all these things are original to him.
How did he manage to do that without reading a book? Because all investors swear by reading.
So, yeah, he's got a genius level intellect. He may not speak, he may not articulate it much, but in any room, he's the sharpest individual. Okay, then he is the best listener I have met in my life. And he'll judge a person in the snap of a finger. He will know in his mind, say, for example, if he is to invest in automobiles or cement or software or ABC, he will know which person to call to get an update to the minute. There are people in markets who are very, very, very updated on so many things. And he would have them on speed dial. You know, in one phone call, he'll update himself on industry thoroughly. Or if he wanted knowledge about a promoter or a person, he would know whom to call to figure out things about that person.
How do you keep evolving as an investor?
So, since my investing journey began in late 80s, mid-80s to Harshad Mehta Bull Run was anything works. May 92, when that bull run ended, to I think late 97 was a horrible period in the markets where hardly anything made secular wealth. And that is when you learned, or rather I learned, excuse me. And after that was the TMT bull run, which was 98, 99, 2000. 2000 March, that ended. And then you had the Ketan Parekh bear run, which went on till 9/11, after 9/11. So September 2001, markets bottom. So my investing journey began or was largely consisting of a time period when stocks were available quite cheap. I bought a lot of stocks at 10%, 12% dividend yield. Say, for example, Ramesh Damani, he identified McDowell, which is now United Spirits, at 200 crores market cap. And we sat in CCI and discussed McDowell that for 200 crores, you are getting 50% of India's hard liquor market. Those were the days when it became. So my investing journey began when everything was absolutely cheap. So I became a value investor. Now, as I said, I had to evolve from seeing those PEs to now where we are at, where analysts come to me and at 40, 50 PE say they are cheap. 27, it is traded at 30 PE. So yeah, it is a journey, but it is tough. You have to fight your basic instincts, your gut to come up with fairer solutions. But still that instinct remains. I am unable to overpay, and that is my investment.
Do you think there is a disconnect between that intrinsic value and the value that market is giving, and there will be a one big reset at some point of time in the market?
I have no way of answering that. But for a value investor, there will be sectors which are ignored. There will be sectors which are undervalued for whatever reason. Like over the last 5 years, this China Plus One gave us chemicals. Realty was ignored because it was a bad sector. Entire realty sector was 1% of the entire market cap of India. Then you had PSU banks. They were, pariahs, dogs. You don't ever invest in PSU banks. But they gave fabulous returns. So there will be stocks and sectors like that. And there will be sectors where, which are hot. And those you avoid.
You started your private equity investing early, but your initial experience was not great. I guess out of some 10, 15 investment, probably 1 or 2 succeeded, if I'm not mistaken.
Sure.
So one, what were the learnings from that? And now today, you are evolving to becoming a lead private equity investor. So where do you get that confidence from, and what has changed?
Yeah, so private equity, I was basically tail coating. I was not a private equity investor. I loved the exit which the markets provided, and I was happy there were enough stocks available, and my capital was not of the size where I would want to, deploy a part of it in private equity. And therefore, if an opportunity came along, I coattailed with other investors. And that is where it all was. Till, you got opportunities. And even say, for example, with Wari, I was not going to be a lead investor over there. I was partnering with a private equity guy, and I hoped that he would be the lead equity investor. But in our interaction with Wari and the people, I realized that my effort will not be required. Only my capital would be required. And fortunately for us and our clients, that private equity investor backed out. And so we got a bigger chunk of the pie. Private equity requires a lot more intensive effort. You need a team, and you need insights, and you need a lot more time. Since everyone is time constrained, you need a team, and you need a smart team, and you need cutting edge research, and you need people who are capable of doing it.
I remember when I started working for ValueQuest for a brief period before I joined Rakesh Ji, we were working on this theme called CRAMS. And of course, there was another presentation done on CapEx at that point of time. So at that point of time, you used to be you would catch a theme, and then you would pretty much buy the entire sector or many small companies and everything. Today, I think you have a slightly different approach to that. Even if you catch a theme, you probably won't buy across the board. What has changed, and how have you evolved over there?
I wouldn't say it has changed that much. Say, for example, realty. We caught that just 2-3 years back. And I did a basket. But the basket was basically, see, Mumbai, Delhi, Bangalore are 50-60% of the realty market. Delhi, there was only one man standing, DLF. Bombay, you had 2-3 players who whose balance sheets were good, who had land banks and who could execute. And Bangalore similarly, 3 players. So it became easy, but it was still a basket approach. Now, the genesis of that earlier basket approach was a lack of in-depth research, stocks being available dirt cheap, and when CRAMS, for example, contract research and manufacturing. So this Arvind Joshi, my friend who started ValueQuest Research, he came up with this acronym. Even the management of the companies did not know that this is what could happen. So at that point in time, there was no way for me to know that, okay, this is the company which is going to succeed. So if you met 10 managements and you thought 5, 6 had decent balance sheets and opportunities and teams, so you invested across those 5, 6, and as things progressed, you either scaled up your investment or you cut back.